Hello viewers, welcome to my channel. I'm Hasham. This video is the continuation of the last video where I have explained you the basic concepts which are used in Income Tax Act. Already in the last video I have explained you about SSC. Who is an SSC? Who is a person? What is previous year, assessment year, then incomes. These are the different concepts I have already explained in the last video. If you have not watched, I suggest you go to the playlist of my channel, select the subject income tax for the assessment year 2022-23. Select the video, basic concepts, and then come to this. In this video, I'm explaining about what are the characteristic features of income. Actually, income tax is a tax on income, but Income Tax Act has not specifically given an exhaustive definition of income. It gives inclusive definition. It says income includes the following. Then there will be a lot of controversy regarding whether an item is income or not. In that case, we have to go to the judgments given by High Court and Supreme Court regarding different cases of income. And accordingly, we come across what are the characteristic features of income. Accordingly, we can decide whether this is an income or not. So now I'm going to explain you about what are the characteristic features of income. Then I'm explaining about gross total income, GTI, then total income, then taxable income, return of income, and lastly permanent account number, PAN, which will be frequently asked in examination. And I already told you this theory is very important because don't depend only on problems. In examination, almost 50% you will get theory, and you cannot make any in your own words. You cannot write whatever is there in the law. The same thing you have to write. Then only you can get the marks. After permanent account number, I'm going to explain you previous year for deemed income. So before going ahead, take the screenshot of the points which I have written on the board. Then I explain every point in detail. Now, characteristics of income. Income may be received either in cash or in kind. Income Tax Act says income tax is applied on income whether you receive the income in cash or in kind. If the Income Tax Act says that only income received in cash will be taxable, then people will go for receiving the income in kind. That's why Income Tax Act says whether you receive the income in cash or in kind, both are taxable. If you receive in kind, then Income Tax Act has given the provisions how to calculate the value of that income which is received in kind. Next one, source of different income should be definite. Income Tax Act has specified that what are the different sources from which you will earn the income. For that purpose, Income Tax Act says 5 sources are there: income from salary, income from house property, profits and gains of business and profession, capital gain, and income from other sources. So your income should fit in any one of these 5 sources. Next come income arises either on receipt or on accrual basis. That means either it is immaterial whether you have received the income or the income has been accrued. You have to pay the tax. Example, out of 12 months salary, you have received from the employer only 10 months salary. 2 months salary is due, but that due salary is also accrued in your income. It will be added to your income. So SSC should not say that I have received only 10 months salary, so income tax will be applied on 10 months salary. No, complete 12 months. Remaining 2 months is accrued, due but not received. Next, if the income is in dispute, the person who is actual recipient has to pay the tax. Sometimes an income is in dispute. 2 persons are fighting for the income and the case is before the court of law. In that case, Income Tax Department will not wait till the verdict given by the court. Income Tax Act will say who is the recipient of the income at present. He has to pay the tax. Later on, the court of law will decide, will give the verdict. Next one, the Income Tax Act does not make a distinction between legal and illegal income. Income Tax Act says every income is taxable, whether it is legal or illegal. Other acts are there which will take action against illegal income. But Income Tax Act not bothered about the legality of income. Every income is taxable. Next comes the nature of the income is immaterial for the tax purpose. That means the income may be temporary income or permanent income. No distinction is made between temporary or permanent income. The nature of income does not have any impact on Income Tax Act. Income Tax Act says whether the income is temporary or permanent, income tax will be applied. Income to be derived from outside. Another characteristic feature, a person cannot earn the income himself or herself. That means income should come from outside. Example, the husband has given some monthly amount to the wife for day-to-day expenses. That means we cannot treat the wife's as an income. Wife got the money from the husband for running the household. In that case, the income is not generated from outside, within. So it is not taxable. Similarly, the monthly pocket money given by the father to the child. So from child points of view, it is not an income because it is not earned from outside, within family, within the house. It is not an income. Income whether received in lump sum or installment is liable to pay tax. Income Tax Act says it is not concerned whether you have received the amount in installment or you receive the amount in lump sum. Both are taxable. Next one, personal gifts are not incomes. Remember, when personal gift is received on birthdays or wedding day anniversaries like that, on wedding day or wedding day anniversaries, these are personal gifts and these are not taxable. Next one, unclaimed deposits amount due to others, that is creditors, is not paid, is not an income. If the amount is not paid to creditor, that will not be treated as an income. Income must be real, not notional. Notional means imaginary. Income should be received in real sense. Example, one head office have sent the goods to branch office at a profit. Income Tax Act says it's a notional profit. Actually, profit will arise when we sell the goods to the customer. When goods are shifted from head office to branch office at a profit, that profit is called notional profit. That is not taxable. Next comes incomes, which includes profits and gains, are known as plus incomes, positive incomes, and losses represent negative incomes. So income may be positive or negative in case of business income. In business, sometimes there is a profit, sometimes there is a loss. So when profit is there, we call it as positive income. If losses are incurred by the business, we call it as negative incomes. Next comes, if interest is due on loans, such interest can be treated as income. If the loan interest is due but not received, we will treat the due interest as income only. Awards received by professional sportsmen is income, but received by non-professional sportsmen will be treated as gift. So prizes received or awards received by professional people, it's an income. But for non-professional people, if awards are received, that will be treated as gift. Next one, cash gift or gift movable property or immobile property in excess of 50,000 is treated as income. If any gift is received either in movable or immobile property exceeding 50,000 rupees, that will also be treated as income. So these are the characteristics of income which we have taken from the judgments given by High Court and Supreme Court. So in examination, if you get the question, what is income? So you have to first of all write the explanation about income. Then you have to write about the characteristic features of income. That's it. Now next concept is gross total income. Actually, the Income Tax Act has given 5 heads of income. Income from salary, income from house property, profits and gains of business and profession, capital gain and other sources. Income from other sources. So if you take the total of the 5 heads of income, the total or aggregate of incomes of all the 5 heads is called gross total income. Now total income. Now from gross total income, deductions are available from under section 80C to 80U. After deducting all deductions available, then we'll get the total income. Example 80C, qualified savings. If an SSC has contributed towards provident fund, like that, it's a qualified saving. So qualified saving deduction will be given under section 80C. Similarly 80D, insurance premium paid, medical insurance premium paid, the deduction is available under section 80D. Then 80G, donations. If an SSC has given donations, deduction will be allowed under section 80G. So examples are given 80C, 80D, 80G. Apart from that, many other deductions under section 80 is available. So from gross total income, deduct all deductions from 80C to 80U. After deductions, we'll get the total income. Next comes taxable income. The total income minus basic exemption limit. For the current assessment year 22-23, the basic exemption limit is 2,50,000 for non-senior citizen. That means a person who is below 60 years of age is called non-senior citizen. Above 60 years, senior citizen, the basic exemption limit is 3 lakh. And super senior citizen, when the age is more than 80 years, then super senior. In that case, the basic exemption limit is 5 lakh. So from the total income, if we deduct the basic exemption, then we get taxable income. Now, return of income. A return of income is the process through which a person will submit the details of his income, expense, savings, etc. to the income tax department. So income tax department says filing the return means every person has to submit the details of his income, expense, saving, etc. In that formal way, when we give the information to the income tax department, that is called filing of return of income. Next, permanent account number. Very frequently in examination, they will ask the theory question, what is permanent account, what is PAN, permanent account number, and who has to apply for PAN? Now I am going to explain you. Permanent account number is the number which is allotted by the tax assessing officer to the SSC for easy identification. See here, Income Tax Act it will be difficult for the Income Tax Act to remember the names, because many people have same name, then it will be confusion. So Income Tax Department will identify the SSC by a unique identification number allotted to every person. So every person, one number will be given. Through that number, the Income Tax Act will identify the person, right? And in case of need, this number is used to trace out the previous return submitted by SSC and the assessment order passed by the department. If in future, if we want to scrutinize the earlier returns or earlier assessment orders given by the assessing officer, then we can trace out the previous returns, trace out the assessment orders by using this identification number. Then when the income exceeds the exempted limit, a person has to apply to the concerned ITO for allotment of PAN. Basic exemption limit is given. If the SSC's income is below the basic exemption limit of 2,50,000, it is not compulsory to apply for PAN. If the SSC's if the income is more than basic exemption limit, then the person has to apply to the concerned ITO, income tax officer, for getting the PAN, permanent account number. Once the number is allotted, the SSC or the PAN card holder need not apply every year. It's a permanent number. That means only once if he has applied and got the PAN, the same PAN will be used every year. It will not be changed. Now, if the PAN card holder loses his card, then a nominal new card will be issued for a nominal fee. That provision has been given. If the card is lost, new card will be issued by paying a small amount. In the case of business or profession, if the sales or gross receipt exceed 5 lakh, one has to apply for the same, though the person may not have taxable income. One more provision you have to remember. If a business or profession is run, then this business or profession has to apply for permanent account number if the gross receipts exceed 5 lakh rupees in a year. Even though there is no tax liability, even though the tax liability is not there, still they have to apply for permanent account number if the gross receipts of the business or profession exceeds 5 lakh rupees. Now, persons liable to obtain PAN. Who are the persons who are liable to obtain the PAN? Compulsory they have to get the PAN. First one, persons whose taxable income exceeds the basic exemption limit. First one, any person whose income is more than the basic exemption limit, that person has to apply for PAN. Secondly, if a person is having income from profession, if a person is having income from profession or business whose gross receipts are more than 5 lakh, compulsorily they have to apply for PAN. Thirdly, SSC under the other acts, example under the VAT. If an SSC is already an SSC under other acts, apart from Income Tax Act, we have so many other acts like GST or service tax or any other excise duty, customs duty, so many other acts are there. So if an SSC, if a person is an SSC under other acts, then he has to apply for PAN compulsory. Exporter and importer, every exporter and importer will have to pay customs duty. This is also another act. So the person who is importer or exporter, they have to apply for PAN. Manufacturer under excise duty, every manufacturer is covered by excise duty, other act. So they have to apply for PAN. Next one is GST tax SSC. Any SSC who is an SSC under GST, they have to apply for PAN. If a person is registered under GST, then they also have to apply for PAN. Traders or manufacturers registered under CST, Central Sales Tax or VAT. If a person is registered under CST or VAT, they have to apply for PAN. Investment of 50,000 or more in a company for acquiring the shares. If a person is purchasing the shares of a company for more than 50,000, he must have a PAN card. Then payment of insurance premium exceeding 1 lakh policy per annum. If a person is having insurance policy and during the year he has paid more than 1 lakh per policy in a year, then again he must have a PAN card. Sale or purchase of any immobile or mobile property exceeding 10 lakh rupees. If a person is entering into a sale transaction exceeding 10,000 of mobile or immobile property, he must have a PAN card. Then cash deposit of 50,000 in a bank per day. If a person wants to deposit some cash in the bank on a particular day, more than 50,000 rupees, he must have PAN card. Without PAN card, a person cannot deposit more than 50,000 on a particular day, on a one day. Like that. So these are the persons who must have a PAN card. They have to apply for the PAN card. Apart from that, many other cases are there where PAN card is necessary. I have given only few examples, 12 examples are given, where a person is liable to hold a PAN card. Now, previous year for deemed income. Deemed income means just like income. Income Tax Act will treat that income as the income of the SSC. That is called deemed income. The items listed below will be deemed to be the income of the SSC belonging to the previous year in which they have been found in the books of accounts, and no satisfaction explanation has been given. If the income tax department see that a person is having an income in the books of account, but no satisfactory explanation has been given by the person, then Income Tax Act will treat that as your income. Example, Mr. X is having a business. Now in a raid, Income Tax Department see that there is a credit of rupees 5 lakh in the books of account. The Income Tax Act will ask Mr. X, from where did you get this 5 lakh rupees? We want the explanation. But X cannot be able to give a satisfactory explanation. Then Income Tax Act says this 5 lakh rupees is your income. So whenever the income is found in the books of account, but no satisfactory explanation is given by the SSC, it's a deemed income. It is just like income. on this income, from the assessment year 22-23 onwards, these incomes are taxed at a flat rate of 60% plus surcharge plus health and education cess without giving any basic exemption. See, so high tax. 60% is the rate of tax plus surcharge if any, because surcharge will not be applied for every case. Only if the total income exceeds 50 lakh rupees in the previous year, then only surcharge will apply. So if there is any surcharge applicable, then surcharge will be added. So 60% is the rate of tax plus surcharge plus health and education cess without giving any basic exemption limit. This is the so high rate of tax on deemed income. Now, what are the cases of deemed income? First, cash credit. If the Income Tax Act see that in a business there is a cash credit, but explanation is not given, proper explanation, satisfactory explanation is not given regarding that cash credit, it will be treated as deemed income. And the SSC has to pay the tax, person has to pay the tax. Then unexplained investment. If the Income Tax Act see that in the SSCs, in a person's books of account, there is investment, but that investment is not explained, no satisfactory explanation is given by the person regarding the investment, it is called unexplained investment. It will be treated as an income and it will be taxed. Next, unexplained money. If a person is found of holding money without any explanation, example, Mr. X, a person is going on the road while traveling, he is carrying some cash, some 5 lakh rupees cash he is having. Suppose Income Tax Act put a raid on that car and found, and they want the explanation, from where did you get this 5 lakh rupees? Who is the owner of this 5 lakh rupees? If he give proper, correct, satisfactory explanation, it's okay. If he cannot be able to give satisfactory explanation of that cash, it will be called as unexplained cash. On that, 60% is the rate of tax. Next, amount of investment, etc. not fully disclosed in the books of accounts. Investments are there, but it is not fully disclosed. Actually, investment is rupees 10 lakh, but in the books of accounts, investments are shown only 1 lakh. Complete investments are not shown. So Income Tax Act says, whichever investments are not disclosed, that will be treated as a deemed income. They have to pay the tax. Next is unexplained expenditure. Income Tax Act says, if a person is escaped by not showing the income, the person will be caught in expenditure. It will be treated as his income. Example, Mr. X is not paying the tax, claiming that his income is below the basic exemption limit, so that's why he is not paying the tax. But later on, he purchased a brand new car for rupees 50 lakh. Now, Income Tax Act will ask the person, from where did you get this 50 lakh rupees to purchase the car? We want the explanation. If the person cannot be able to give the explanation, then Income Tax Act says it is your income, we treat it as deemed income, and you have to pay the tax at 60%. So unexplained expenditure will also be treated as deemed income. Lastly, amount borrowed or repaid on hundi. Hundi is an illegal way of transferring the money from one place to another place, from one person to another place. It's the illegal method of transferring the money. So if a person is caught on having the hundi money, that will be treated as his income and he has to pay the tax. These are called the deemed income. So in this video, I have explained you about the characteristic features of incomes, then gross total income, taxable income, permanent account number, and the deemed incomes. So watch the video not once, twice, thrice to get the complete command on the theory. Confidently, you can write in examination the theory regarding these concepts. That's why I'm saying don't give importance only to problems. Have a good command on theory also. So if you are satisfied, give a like to the video. Share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. Give your comments, feedback on these videos. Subscribe my channel if you have not yet subscribed. And by the super thanks which is given below my video, inshallah we will continue the next topic in the next video.